Well, we have 4 producing assets, 3 mines in Bolivia, 1 mine in Mexico, 1 exploration property in Bolivia, which will allow us to keep growing organically, and 1 ore sourcing feed or feed sourcing company in Bolivia as well, which complements nicely into our business model, and I'll explain you in more detail. We have our operations in Mexico and in Bolivia, as I was pointing out. Combined, the 4 producing mines and the ore sourcing company produced last year around 14.6 million ounces of silver equivalent, around almost 6 million ounces of pure silver. We have our mine in Mexico in a safe district, or the Zimapan mining district in Hidalgo. It's a safe jurisdiction. We have as neighbors one of the largest military camps down there, so it's how that it's in. Both countries, as you know, Mexico and Bolivia, they share a lot of similarities, culturally speaking. We understand how things work down in Bolivia, same as in Mexico. So there are 2 jurisdictions where we feel very comfortable, especially now, as you might have noticed, Bolivia has become more friendly for the foreign investment just recently with last year's presidential elections. So we're very happy and very positive on how we see the country for the next coming years, especially in the mining industry, which is the flagship industry of the country. Here we have our production for last year, 2025. We produced close to 14.5 million ounces of silver equivalent. On the right side of the slide, we have the production on a per mine basis. San Lucas, it's our ore sourcing company or trading company. What the main purpose of this company is to provide ore to our milling facilities and make sure that these milling facilities are running at full capacity all year round. Last year's, these are Q3 financial statements. We have not filed our Q4 year-end financial statements, but we report around $74 million in EBITDA. We had at the moment $59 million cash on hand. At this year, by year end, we keep building our treasury. We close the year with a close to $80 million in our treasury. We have no debt, no streamings attaching to the company, so this is very accretive for our investors. I would like to highlight our all-in sustaining cash cost in Zimapan, which are really high at $32, and the main reason is because we have arrived at level 960 at Zimapan. It's a very large ore body, and to start producing from that ore body, we build 2 inclined shafts. We bring ventilation, we bring power, energy, we bring water and compressed air, in addition to other equipments. We bought around 15 underground equipments, and the mine, that area is already producing. This year, we're going to be adding 1,000 tons on a monthly basis from that area alone. So we should be producing or milling around 80,000 tons a month by Q3. That will give us a gradual increase in the production for the Mexican mine, and as well as some additional efficiencies that we're achieving in the milling facility with the improved recoveries. So our budget for this year will be an increase in production for around 1 million ounces, and with an all-in sustained cash cost between $25 and $26 for the year. This is a glimpse of our balance sheet. We have, as I was pointing out, no debt. Our current asset and are $188 million. Current liability is $119. Our equity line is increasing quarter over quarter as we keep accumulating cash. Some of our ratios here are our enterprise value to EBITDA is 9.6, 9.7 times at the moment. So working capital today is around $70 million. This is a glimpse of our share ownership. We have a lot of retail investors and institutional. We're growing our institutional base as we're doing more marketing, more awareness about the company, the health of the company, and that it's increasing our institutional and family office base of investors. We have a strong management in place. Eduardo Torresillas, our COO, he's a seasonal miner in Bolivia. He's also the president of the Mining Association in Bolivia. We have Andrés Verregal, a very experienced banker and now our CFO, and a very strong board of directors within the company. That's pretty much for what we have as a description of the company today. We still have an asset, the Soracaya property, sorry that we did not include it in this presentation, but Soracaya is a project that it's on the process of getting fully permitted. We expect to get full permits on hand by July, August this year. And at that time, we'll start production at Soracaya with a slow production, 200 tons per day. We're going to be milling that ore within our one of our nearby milling facilities. And by 2027, we will start construction of a milling facility and take this mine into full production beginning 2028. This mine, our budget is an increase of, it'll give us around 3.4 million ounces of silver equivalent in production, where most of them, around 75%, will be pure silver. So that's where our organic growth will be coming in the next coming years. So we expect by 2028 to be producing close to 19 million ounces of silver equivalent. We'll be very disciplined with our treasury and our financing approach towards the investments in capex of the company. So yeah, that's pretty much where we will be.